Tiff Macklem has a huge decision ahead of him in just a couple of days, and he's got a little bit of a dilemma in making that decision. I'm going to jump into an article with you covering exactly what I'm talking about, and then don't worry, I've got you covered. Greater Toronto Area real estate market stats for November 2022 are coming right after that. Hello, everybody. It's me, Robert Marsiglio, sales representative with Keller Williams, Referred Urban, out here in Durham region, but bringing you all the stats for the Greater Toronto Area this week, as well as that economic recap I promised. And the way I'm going to break it down, like I said, off the top, we're going to hop right into this article. And then in a couple minutes, we'll get into all those stats. So please stick with me until then. This article here was posted in Reuters this week, and it says Canada's deep yield curve inversion adds to Bank of Canada rate hike dilemma. As the Bank of Canada considers ditching oversized interest rate hikes, it is dealing with an economy likely more overheated than previously thought, but also the bond market's clearest signal yet that recession and lower inflation lie ahead. Canada's central bank says that the economy needs to slow down from overheated levels in order to ease inflation. If its tightening campaign overshoots to achieve that objective, it could trigger a deeper downturn than expected. And what's making things so tricky is that the bond market could be flagging that risk. Now, the yield on the Canadian 10-year government bond has fallen nearly 100 basis points below the 2-year yield, marking the biggest inversion of Canada's yield curve in Refinitiv data going back to 1994 and deeper than the US Treasury yield curve inversion. Now, this is a chart by Bloomberg that just outlines this yield curve inversion. So you can see this red line is zero. This is when the 10-year and the 2-year yields are even. And when this line dips below zero, that's when the curve has inverted. Now, why is this important? Well, first off, you can see the magnitude of this drop that we're at right now. That's the 100 basis points that was just talked about in the Reuters article. And that's the most that we've seen since going back to the early 90s. And it's important because this inversion is an indicator of recession. You can see this is from the States, but again, preceding a recession, we'll see this yield curve invert. So again, this black line is roughly zero. Every time we see the yield curve invert well below, it's followed by a recession, which is this gray area. So this is signaling right now that we are headed for a recession. The Bank of Canada has opened the door to slowing the pace of rate increases to a quarter percentage point following multiple oversized hikes in recent months that lifted the benchmark rate to 3.75%, its highest since 2008. So for the announcement in a couple days, the money markets are betting on a 25 basis point increase when the bank meets to set a new policy rate, but a slim majority of economists in a Reuters poll expect a larger move. One reason that they think it could be larger is that the employment report for November showed the labor market still remains pretty tight, and gross domestic product grew to 2.9% in the third quarter, which was much stronger than the 1.5% that they forecasted. While those numbers were strong, they say that details of third quarter GDP data, including a contraction in domestic demand and preliminary reports showing that there's been no growth in October, are signs that higher borrowing costs, i.e. those higher rates, are beginning to have an impact on activity. David Rosenberg says that the inversion curve signals a bad recession in Canada, not a mild one, and that there's a greater risk to the outlook in Canada than the United States due to a more inflated residential real estate market and consumer debt bubble. So those are a few of the things that are influencing the decision that is going to come from Tiff Macklem on December 7th. And I will have a full recap of everything he says later on in the week when I do my Durham region real estate update. But let me know in the comments below, do you think it will be a 25 basis point hike, a 50 basis point hike come December 7th? Do you think it'll be a little more? Enough of this realtor speaking about economics, so let's hop into what happened in the Greater Toronto Area real estate market in November 2022. Start things off with everybody's favorite. That's the median sale price and what happened there. So Toronto freehold at 1.2 million, condos at 655,000, Durham region 818,750, York region 1.2 million, and Peel region at 960,000. So these percentage points below are what happened month over month. And I wanted to highlight that because Toronto freehold and Peel region holding about steady. York region saw a bit of a kick up. I know there was an explanation for the average sale price going up. I know there's a lot of high-end properties sold in King, more so than usual, which that's a big price point in King City, dragging that average price point up. I like to use median because it kind of takes a lot of those top sales out, those bottom sales out, tries to find that kind of perfect middle, if you will, in between the two. Not really sure the reasoning this time. I tried to look at, is there a different spread of condo versus freehold sales this month versus last? There was slightly less, like 3% less of the sales were condos this month. So maybe that could be attributing for the slight uptick in the median sale price. But bottom line, downward trend slash holding steady-ish still is what we are seeing right across the board for median sale price. Comparing it to where we were at last year, you can see Toronto is down 12.1% from last year on the freehold side, and kind of right about even, but dipped negative this month officially on the condo side. Durham region down just over 14% from last year. York region down 7.5%, and Peel region down 6.8%. How about our sales totals? This time we are comparing to where we were at last year. And you can see Toronto down about 44% on the freehold side and about 57% on the condo side. Durham region down about 44%, York region down 47%, and Peel region down big time, about 55% in sales activity from this November to last November. Breaking it down in a different way, this is our rate of sales, just so you can see kind of the change. And you can see that we did have a bit of a pickup in sales activity, I'd say, near the middle of November through the beginning to middle of November. But that started to fall back off, and I would expect to continue to see this trend line downwards into the slowest part of the year, December, January, kind of the holiday season and the winter months in the Greater Toronto Area. Our days on market as well, just taking a look here. Wanted to just highlight the difference between where we were at last year. So last November is this first kind of column, and where we're at now. You can see, Durham region's about doubled. Peel region has more than doubled in their days on market. Everybody is up pretty significantly from where we were at last year at this time. What about new listings activity? Are we seeing more inventory? No, not quite. Again, this is comparing year over year. Where are we at? So from last November, we are down about 15% in Toronto, freehold, and 14% on the condo side. Durham region saw a slight uptick this November from last November in terms of new listings at just over 1,100. And then York region down about 11.5%, and Peel region down about 9% from last year in the number of new listings. Steady downward trend again in active listings. So much like the pace of sales, I'd expect to see these numbers continue to fall off for the rest of the year into next year, and then we'll see what happens come, late winter, early spring 2023. So there you have it. A little economic recap off the top, as well as all the stats that you keep coming back to this channel for, and I do appreciate you so much. I'll be back again later this week recapping again what happened with the big announcement from the Bank of Canada in terms of the overnight rate, and with my breakdown of Durham region specifically. So if you are one of my Durham region followers, please make sure to tune back in later in the week for that. Until we speak again next time, please stay safe and cheers.